Hi, my name is Joshua Pardue. I've conducted over $2 billion of transactions in the net lease space for my clients, my own account. In the last decade, the net lease industry has gone from $20 billion of annual trades to over $100 billion. And there's still massive opportunity for growth within the sector. In this video, I'm gonna give you the skills and strategies required to be successful within the net lease industry. What is net lease? Within the real estate sector, you have commercial real estate, and within commercial real estate, you have net lease or build-to-suit investing. All net lease investing really is focusing on properties with a single tenant with one long-term credit lease. And why this is important is because you're underwriting the credit of that tenant and making sure for 15, 20 years they're gonna pay their obligations. From an investor perspective, you get long-term income with minimal involvement. From the tenant perspective, you get a building with other people's money and you get to keep your capital on your balance sheet. How does net lease work? Well, net lease works with the triple net lease, or the three responsibilities the tenant is responsible for in a typical net lease are property taxes, insurance, and common area maintenance of the full property. By the tenant being responsible for these, it is as if they own the building and they get the luxury of selecting their vendors and feeling full control of their property. From the net lease investor perspective, they get to focus on just the income stream that comes off owning the property. You then match that income stream with a blend of debt and equity in order to optimize your cash-on-cash returns. When you look at buying net lease, one key focus that you're always paying attention to is what is the cap rate? The cap rate is simply the property's net operating income relative to the purchase price. For example, if you buy a $100 million office building and it has $5 million of net operating income, then that's simply a 5 cap. Or if you were to take a $5 million income stream and divide it by 0.05 or a 5 cap, you would then realize that your asset is worth $100 million. The valuation triangle: income, cap rate, value. There are fundamentally two ways to invest in net lease real estate. You can either invest in a development project of a single tenant net lease building, or what the majority of people do, which is acquire an existing single tenant net lease asset. I think about it like baking a cake. A developer brings the ingredients together, takes time, risk, and investment to create the cake, and then when he's complete at some point, they will sell that cake to the person that buys the cake for the benefit of eating it. The long-term income stream, that's your long-term stable investment owner. Today what we're going to discuss is how to be a net lease investor of the existing building. So how do you find net lease deals? Well, you can start with online research, networking with the brokerage community, looking at actual investments. And then what you've got to do is start to get out there, build your personal brand as someone that focuses on and invests in the actual sector. Once you build your brand with brokers and owners, then you're ready to start getting after the projects. What does that mean? Writing letters of intent, writing contracts to go out and acquire the investments. You can work with the brokerage community, or you can call property owners directly, or you can reach out to banks for any defunct possible assets. No matter how you get started, you got to get your first letter of intent out, get your first deal under contractual control. Then once you've done that, you're ready to shift your focus onto underwriting the net lease real estate. That's what we'll discuss next, the 3 legs of the stool, how to successfully underwrite net lease real estate to assure you have a successful long-term investment. So now that we've discussed how to get net lease real estate under contract, we can jump into my favorite part. This is understanding how to underwrite net lease real estate, which we commonly discuss the 3 legs of the stool. If you picture a stool with 3 strong legs, you know it won't fall over. Leg number 1 is the tenant's credit. The tenant credit simply means, can the tenant fulfill their long-term financial obligations and pay rent along a 20-year lease? The easy way to underwrite that is first look at the tenant's industry. Does the industry have good fundamentals? Is it growing? Then you'll look and start to drill down. How is the company doing? Does the company have good financials? Are they trending in the right directions? How are their margins? How is their use of debt? How are their M&A strategies? Is there a private equity company acquiring with a lot of leverage, or are they owned by a fundamental long-term investor? Then from there, you can look at the leadership team, look at the industry that they're in, and look at, does their product or service actually create value? Once you feel good about your tenant's credit as a public or private company, and you've fully underwritten that, then you move to the next leg of the stool. Next leg of the stool, how is the contractual lease document? Is this written in a manner in which the tenant has to pay rent the whole time, or are there ways to get out? Is it really clear whose obligations for roof, structure, who's responsible for that? Taxes, insurance, common area maintenance, those are the 3 legs of the stool. Is it well defined? define who's responsible for that. Once you feel good about the lease, then you can move to the last leg of the stool, which is understanding the quality of the real estate. Quality of the real estate still matters. How well is it located within a market? Is that market a growth market? Is the city doing well, or is the city trending down? How are the demographics? How are the ingress, egress to get in and out of the property? How are the interstate logistics? If your tenant leaves, is this a box that another tenant can come into? Once you've fully underwritten the quality of the real estate, then you can say, I have underwritten a good, strong net lease investment. If one of the legs of the stool is weak, you'll have a problem. If two of the legs of the stool are weak, then you're definitely going to have a problem. So you've completed your underwrite, you're good with the investment, you want to move forward. How do you capitalize the deal? How do you execute, create value, and own it? Well, you have to determine your mix of debt and equity to get to 100% of the purchase price. So if you use banks, insurance companies, or other debt finance vehicles to get 80-90% of the acquisition price, that's your fixed debt proportion. Sometimes you float it depending on the interest rate, but once you have your debt in place, then you move on to the equity piece. Your equity can either be your own personal equity, or it can be one investment partner, or you can create a vehicle with multiple investors through an operating agreement or other legal entity document to raise the funds to acquire the equity piece of the 100% of the asset class. Once you've done that and your deal is well capitalized, then you can move on to closing and receiving the benefits of the long-term income stream. The last concept we're going to talk about are uniquely niche strategies to creating above market returns within net lease. Versus just buying a long-term income stream, there are creative things you can do to drive up the returns. You can invest in a net lease investment early with a developer when there's still risk involved in order to receive better returns. You can invest in a lease restructure, which is approaching a deal with, call it 3 years of lease term left, and the tenant may leave or they may stay. If you put that under contract and you work with a tenant and they'll extend that back out to a 10 or 15-year lease, that creates a lot of value and it's still owning a net lease investment. Working with small businesses on sale leaseback is a great niche strategy. You approach a business that owns their real estate and you enter an arrangement where you buy the real estate for a large lump sum. Sometimes you'll overpay for the real estate, but you'll enter into a lease simultaneously for a 20-year income stream from a credit tenant. Any of those techniques and other ones we'll discuss in the future are ways to create unique niche strategy within net lease. Today we covered a broad entry-level list of topics on how to get started in net lease. As mentioned, this is still a massive growth industry with a whole lot of room for new market participants. There are new groups coming in every day and there's a reason for it. There is a bunch of single-tenant net lease properties in North America that you can go after today. If you found this content helpful, check out some of our other videos where we'll dive in deeper to help you build your investment portfolio.